Some really great news has dropped in Australia with the inflation rate dropping yet again this month. In this video, we want to figure out when interest rates could possibly cut in 2024 and why, despite the inflation rate being higher than our target band of 2 to 3%, why are banks now predicting interest rates to come down in 2024? If you're interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, given that it's a new year and you're looking at buying an investment property, you might want to get some help to get started and move at speed because this year is going to fly by. Just like 2023, I think this year is going to be absolutely amazing for property gains, but it also means that you're going to be competing with a lot more people. So if you need the help, definitely book in a free call. I'll leave a link in the description below to our website. Now, what you can see here is the monthly CPI, and what you'll see is two lines. You'll have, obviously, in the darker blue, you've got monthly CPI excluding volatile items like holiday and travel, and then you've got the other line, which is the monthly CPI indicator, and that takes in everything. So some would argue one is more accurate than the other, but we're just going to look at both with the macro trends anyway. What we've just had is the November reading, which came in at 4.3%. The expectation was that this number was going to be higher, but it came in lower than this. Now, there's pros and cons to this. When you hear good news, maybe it is good news, but when you hear good news, it's sometimes bad news. And what I mean by that is that if inflation is actually falling, the good news is there's less pressure for interest rates to go higher. But it also signals that maybe we have the economy slowing down, and that might mean that we lead to a recession because, as we know, job adverts have started to drop, and we've started to see how the power has gone away from the employees more to the employers. That's because we had so many job ads relative to how many people were applying. So people who were applying were saying, well, you need me more than I need you. And now what's happened is the balance has started to shift. So if you think about it with, say, rental properties, at the moment, everyone is aware there's a rental crisis. And that's because there's not enough properties for the amount of people that want to live there. But what happens if we have increased amounts of property and there's so many rental properties available, then people get to pick and choose and probably even negotiate on what the rent will be. So in this case, right now, employees have less choice because the people that were advertising and there was multiple jobs out there suddenly are gone. And that might be because the economy is actually slowing down. Now, if you look at our retail numbers, it is atrocious. Yes, we've had a small blip up, but that's largely due to all of the holiday spending that most people have, especially when you have a lot of sales and you have Black Friday deals that extend through November as well. So per capita, we are actually in a recession. And what that means is because we have had so many immigrants come into the country, we've been able to offset it and say, well, the economy is still technically growing, but when you actually factor in how many people are in the country versus how much economic growth we've actually had, we are already in a recession. So is this an indicator of what's to come? Well, with our latest inflation data, 4.3%, if you adjust to look at this number and say, well, the RBA actually looks at 2 to 3% being the target band. So unless you're in 2 to 3%, how are we even talking about interest rate cuts? And that's because we need to look at where we've come from. So when we go back to December, about 13 months ago, you can see that the monthly CPI was coming in at 8.4%. And every month since then, we've just seen that number continue to drop. There's been a couple of points where it's upticked slightly, but overall the trend is down. And you can see now, about 12 months later, we're at 4.3%. So all the way from 8.4 down to 4.3. Now that is a volatile move. And when you actually look at this and say, well, okay, based on the trend, it means the economy's inflation is actually in free fall. But what I want to do is share with you what happened to get us here. And this is very important because what we do is we look at mainstream media, we talk to people, and everyone says the same thing. Wait, inflation's a problem. Let's just look at the numbers right now, and then accordingly, that's how we'll act. But that's the same mistake the RBA made when it came to the 2020 and 2021 numbers, and we saw the inflation numbers change then. So obviously, if we're looking here, we're at 2.4% at March 2020, and that was just the start of the pandemic. And you can see that number drop into the negative in May of 2020. And that was not just done in Australia, but it was done worldwide. And from that point, we started seeing some sort of economic growth. So you start seeing inflation start to go up, and really, we start seeing it noticeably go up about 12 months later. And that's when we're seeing rates of about 2 to 3%, but this is in June 2021. So if the government was to look at these numbers and say, okay, we've seen where we've come from, the economy was deflating, and now we're growing at like 2 to 3%, that's entering our target band. So what we should do is probably not cut as much now, and instead we taper off and in fact, probably start pricing in some interest rate hikes towards the back end of 2021, which as we know now, didn't happen. And so what we saw was low interest rates during that point. We didn't see the first rate hike till about March 2022. And at that point, we have just come from minus 0.1% all the way up to 4.4%, roughly a 4% move in that time. And that is the first interest rate hike. What we see over the next 12 months is inflation kept going higher, yet our interest rates also increased. And it left so many people scratching their heads going, okay, I don't know what's going on here. Inflation is sticky apparently. But it's because you had 2 years where interest rates were so low that if the RBA had picked up on the trends earlier, they may have gone, let's just not look at the number today. It's where we've come from with these numbers. And that's the same problem they're making now. It's the same mistake. Because if you look at the number right now, saying, okay, it's 4.3%, it's significantly higher than where we need to be. It's come back off 4% because it was at 8.4, now it's at 4.3. So if we were to continue this trend, we could find ourselves experiencing the opposite of what we experienced before, which was really high inflation. We could now see ourselves in 6 to 12 months with really high levels of deflation. And that's where the economy is contracting. Now, something else to consider is what's happening in the global economies. As much as people don't like to think that, oh, what happens in the US, we won't follow here, there are some ramifications of certain things. So let's look at this graph, for instance. What you can see here is Australia quarterly and monthly CPIs. You've got the US, Canada, New Zealand, UK, and the Eurozone. And what you can see is they all follow a very similar trend, and it's because everyone did the exact same thing, which is we were traveling okay, then we suddenly see the economy fall through the floor due to the pandemic, and then everyone experiences high levels of inflation, and they've all started to have free fall. Now, what's interesting is in the US, there's a high probability of like 80 to 90% plus that in March of 2024, the first rate cuts will be delivered. And why this is important is because when we started hiking rates, we did it about 6 months after the US started. So if we're to follow the same thing and they actually cut in March of 2024, we could see interest rates cut here in Australia by September of 2024. I know there's a bit of dubious speculation here, but what you can't deny is the fact that inflation is falling. And if you look at the trends over the last 4 to 5 year period, you can see where those mistakes were made by not acting quick enough. I'm not saying that when they start cutting, they cut it by like 100 basis points, but they can start putting those interest rate cuts in place. So if we did see the entire economy fall through the floor, I'm pretty sure that was a song at some point, then at least you've already started the momentum. We don't want to make the same mistakes. And the reason I keep coming back to it is because it honestly feels like they are making that same mistake. And remember, when we started hiking rates, we had to do it quite significantly. So it started at like a 25 basis points and then we're like,
nothing's happening.
So we started going 50, 50, 50, 50. And then we're like,
okay, we've probably screwed up because there's nothing actually working right now.
And now you have the opposite. What this could lead to is higher levels of unemployment, but more importantly, if you start seeing the US actually go and cut their rates and we hold, one of the other effects to this is that our dollar is actually going to increase in value relative to the US dollar. So you might be sitting there going,
well, that sounds like a really good thing because if I'm traveling to the US, it suddenly becomes cheaper.
And that's true. So what we see is a bunch of people in the local economy, being Australia, will go and travel overseas because they're like, hey, it's like 10 to 15% cheaper to now travel. So if you go and do that and you spend the next 3 to 4 weeks over in the US or in the UK and you're going around Greece and it's a good time, well, all that money that you're spending is in those economies. It's not being spent in Australia anymore. And guess what? When the global economies want Australia's products, it suddenly became 10 to 15% more expensive. And that could mean less demand. So you have less demand for our exports, you then have less local spending. That means you have a whirlwind straight to the bottom where you have deflation really kick in. That could lead to people getting fired from their jobs, and that's how we go into a recession. Now, our monthly CPI inflation is actually the lowest it's been in 2 years. So if you actually think about this, we're going, okay, 2 years ago is where the inflation number is, and we know what was happening just before the 2 year period. So that's why I'm saying it's something to keep in the back of your minds. I know there's a lot of confusion around why interest rates will cut, when will they cut, why do they cut? But if you're someone who holds debt, I think we're almost at the end of this period where we have to experience really high levels of interest rates. And I know there are so many people struggling. Now, a couple of experts have shared their opinions. So let's go look at what they're saying. Deloitte Access Economics partner, Stephen Smith, said that inflation figures really cement the case that there won't be an interest rate increase in February or indeed another one in this cycle. We think that we've now reached the peak in interest rates and that there's all likelihood that there will be some interest rate cuts later on in 2024. He forecasted a decrease in interest rates could come in September. So that sort of lines up with our theory as well on the channel. You've got Josh Gilbert, market analyst at eToro, says that the latest inflation data, interest rates cuts could come by August. I think there could be sooner if inflation keeps moving in the right direction, he said. And then you've got senior market analyst for IG Australia, Tony Skymore, told SBS News a rate cut could come as soon as June. His optimism was also due to the inflation figures. According to the AMP chief economist Shane Oliver, he predicted that there will be 3 rate cuts in 2024, starting in June, but he said rates would not go down as fast or far as they had risen in recent years. He said, I doubt very much that we're going to get back to the lows we saw 2 years ago. When we had a variable rate, we had the cash rate at 0.1%, he said. Now, to a certain extent, internally, I'm saying I agree with that. I don't think we see interest rates back at 0.1%. However, you only cut interest rates when the economy is sick. So here's where we bring it all back together. Good news could be good news on the surface, but in fact is actually really bad news. And so if we start seeing interest rates cut, that could be a signal that the economy is sick. And if we continue having interest rates being cut, then you'll know there is a problem. There's something that's broken in the system that hasn't really surfaced yet. And that could be something like unemployment, which sometimes could lag, but is a very key indicator. Obviously, by having interest rates cut in 2024, that would have massive ramifications on the Australian property market as well, because we know we're working off such a low base. We have low levels of construction, low levels of approvals, and I've covered this extensively in this video, so definitely go check that one out. Should we see an increase in borrowing and increase in demand, the numbers that we see in terms of growth could be absolutely anything. And I know some would go on to argue saying that if we have a recession, we'll see prices actually fall. Although that could be true, I think the opposite could occur, because this recession that we experience will not be the same as what we've seen in the previous business cycle being in 2008, 2009. I think it could be very similar to what we see during the pandemic, where we did technically enter a recession and a deflationary period, but we saw prices actually go up during that time, whereas most people expected they would go down. So if you have enjoyed this video or you have any questions at all, leave me a comment down below and I'll be happy to help you. Otherwise, subscribe to the channel. Let's make 2024 great. And if you need a hand at all, there's a free ebook in the link in the description below, as well as a free call if you want to speak to my team to make shit happen this year. I hope you guys have enjoyed this video and catch you guys in the next one. Thanks, guys.